Good morning, Armor Insiders, and welcome to our morning meeting of the Virtual Hedge Fund. Today is a big day. So we're going to go over the risk monitor, how we're executing, what our strategy is for 2025, and the step-by-step approach that we're taking to simplify execution and use Armor information to manage an equity portfolio. So I'm going to share with you what I'm doing personally with the information and how I manage portfolios for others using the information. And at the end of the day, as I always request, please take the information, figure out your own risk tolerance goals, what's the strategy you want to execute, and follow that. You have to be the smart money at the end of the day. All right. So let's go over Armor Macro. Let's go over our swing strategies. Let's go over top stocks to watch, top stocks to buy, and how we're going to do it over the next couple of days. So to start the discussion today, Risk Monitor is now green. All 10 indexes gave us the risk on signal yesterday, with one index giving us the signal 2 days ago. We've changed the risk monitor to start 2025. And what we did was we swapped out the value index for Bitcoin. Value index was offering no value to us when it comes to helping us put risk on and take risk off. It was kind of duplicating what we already see in the equally weighted S&P and what we see in the small cap index. And so we removed that to start the year, and I've added Bitcoin using ARK, the ARK ETF, to run the algo on. But Bitcoin, ARK ETF, any other ETF that owns Bitcoin, it's all the same thing. So 2 days ago, Bitcoin gave us a risk on entry point as a lead indicator to the other 9 indexes that went risk on yesterday. So let's just go over thoughts of what this risk on looks like and how I'm going to run money based on it. In no particular order. All 10 indexes have gone positive within a 24-hour period. I mean, 9 went positive yesterday and Bitcoin the day before. That is a very bullish indication. Sometimes it can take 48 to 72 hours to get the other indexes to give us risk on. So our strongest indexes, I should put it this way, our strongest algos with the highest probability are applied to the S&P and the NASDAQ 100 weighted indexes for obvious reasons. That's where the highest probabilities show up. And then right below that are equally weighted S&P, equally weighted NASDAQ, the Dow, small caps, okay? So when all of them fire in the same day, I submit to you there's only one animal that can make that happen, and that's institutions putting money to work. So that's very bullish. That's high yield bonds. Now, bonds lead stocks, and you've heard me say this repeatedly for the last, month or so as the market's been headed down. And I've been saying to you, treasury bonds are imploding, and so bonds lead stocks. And what we had here was a major breakdown to the 200-day moving average and high yield debt. And that's the canary in the coal mine. When high yield debt starts to break down aggressively, equities generally collapse, okay? But that breakdown stopped right at the 200-day moving average, made a double bottom, and gapped up yesterday. I've got an algo calibrated for high yield debt. I don't include it in the risk monitor, but I have it allocated. I definitely follow it to see what's happening. It went risk on yesterday also. And you can see it's building what could be a mini island reversal after a double bottom at the 200-day moving average. It doesn't get better than that. So that counterbalances the weakness in treasury bonds, which has been really bothering me. What the algos are telling us is that the sell-off that started, and let's go look at the S&P algo now for triple the S&P, that started on the 9th of December. That sell-off is over for now, and some type of rally is going to ensue. We don't know if it's going to be a big rally. We don't know if it's just going to be releasing some of the steam from the oversold condition. So you get a pop and it kind of rolls over, and a week or two from now, we're stopped out, market's going lower again. It could be that. But at the very least, that selling is going to take a break. And that's when we put risk on. Please don't fall in love with this strategy's performance over the last 26 months. It's easy to fall in love, up 135%, 90% accuracy rate, and all that kind of stuff. But don't fall in love with that. It's just a probability algorithm. It's not a crystal ball. We know some of these entry points are going to hit stops. We're going to lose some money. What we need to do today, this year, and every year is lose money the right way. When you're making investments, some things are going to lose money. You know that going in. The object is to get on the right side of probability when rewards worth risk and accept those returns. So those of you who've been watching along as we've built that track record 26 months and have said to yourself, okay, 2025, I'm going to do it. And you're out there putting money to work with me yesterday, and we get stopped out today. It could happen. And you can't give up on the strategy because probabilities only work over time. And I would submit to you that if you're going to follow the swing strategies that I'm sharing with you, it has to be at the very least a 12-month commitment. And you have to accept whatever the results are at the end of the 12 months because you've got to get the probabilities on your side. There could be 5 entry points this year. It's possible. The first one could lose money. The next 4 could make money. You can't quit just because you lose some money. So if you're going to commit to an algorithmic strategy about probabilities, you have to trade enough of it to allow the probabilities to work in your favor. So let's go look at this S&P algo that we trade. Okay, the last exit was basically top tick the market. Okay, we were out at the end of the day, what was it? 186 and change. We're back in, let's say at the end of the day at 173 and change. We win no matter what happens here, right? We're adding our S&P trade. We're trading the S&P. We're adding the S&P trade more than $10 below where we sold it the last time. So just execute the strategy and shut off all the noise around you. There's the market climbs a wall of worry. There's always going to be someone telling you the market's going to go down. This is a false signal, this, that, the other thing. Just execute strategy and live with the results of that strategy. Let's talk about how to execute this signal. It is true if we look at, for instance, just look at the S&P here, right? We're still in a downtrend. Market's in a downtrend. We're getting a buy signal before it breaks the downtrend. Equally weighted S&P broke the downtrend. The Dow broke the downtrend. So some of the indexes are breaking the downtrend. Others are still in the downtrend. It's true, I will be more comfortable if this entry point is above the stop by tomorrow's close and we have a weekly candle that's bullish. I'll be more comfortable if by Friday at the close, the weekly candle's bullish and we're breaking the downtrend. But the algo is about getting capital to work closest to the stop. It doesn't wait for a downtrend to be broken. Everybody does that. That's not going to help us. I don't want to pay up for something. I want to put capital to work as close to the stop, live with the results. So How do I want to put the money to work? And how much money do I want to put to work? These are questions you have to ask yourself. I can't answer for you. I'll tell you what I'm doing. I was having an interesting conversation with an Armor insider yesterday. I'm calling all of you. We're all chatting. That 917 number's me. Okay. And I was chatting with him, and his biggest problem was I know that you commit all of your capital closest to the stop, and that's just so hard for me to do. But I really want to do it this year. And what I submit to him is, whatever all your capital means, it means something different to each of us. You don't have to do what I do. But what I am requesting is that whatever you decide to commit at this entry point, that's what you live with to the end of this trade. So I'm going to walk you through what I'm doing. You figure out what you're comfortable with if you're going to follow what I'm doing. You have to be the smart money. I can't tell you how to do it. Okay. So you got to figure this out for yourself. But if you're going to follow what I'm doing, it's not a question of how big you're able to make it. You don't want to be uncomfortable, because then you're not going to be able to execute correctly. So do what you're comfortable with. And this is the one thing I request. When we're up big 2 weeks from now, don't add more. That's step one. Can you do that? Can you be that disciplined? Whatever you're willing to commit now, that's it. 5 days from now, the window shuts. When the risk monitor goes green, we have 5 days to put money to work. Then the window shuts. Whatever you're comfortable committing, whether you commit it today or at the end of the 5th day, that's the capital you're committing. And the first step of turning around your performance as an investor is to stop adding. Weeks from now, market's making an all-time new high. Everyone's cheering on CNBC. And you say to yourself, oh, I didn't put enough money to work 2 weeks ago, so I'm going to add more now. That you have to avoid. So figure out what you're comfortable with. Execute that to the completion of this trade, of this entry point. Be content with the results. And the next time we get risk monitor green, you could decide, hey, you know what? Last time I didn't put enough money to work. This time I'm going to put a little bit more to work. Earn the right to take more risk. If I had to list what will I do today, it's going to be Coinbase and Pure Storage. Okay, I'm on record as saying I think Coinbase is the Palantir of 2025. Okay, I talked about Palantir in February of 24, and I showed you this chart pattern, and I said this is going to be a huge stock this year, and it turned out to be. It's the same type of pattern on Coinbase. Okay, these are hot new issues. They make a huge base. They break out of that base, pull back, and then take off. If this is the year of Bitcoin, then this is going to be the year of Coinbase. That is a perfect entry point. Coinbase and Pure Storage will be my first 2 investments. It's 9:27. We got to hop here, get the live trading desk started in 3 minutes if I can. Anybody got any questions for me, feel free to shout out, DM me, follow me on Twitter. You can DM me there. You can send a message through Slack, or you can give me a phone call, 561-575-6832. Everyone have a great trading session. And remember, think about your strategy and be the smart money.